Good afternoon, ladies and gentlemen, and welcome this afternoon's CPI live trading event. I hope you're all doing well today. Oh, it's all been a bit of a mad rush over here. Held up at bloody BMW for ages. They were like, hello there, Mr. Norbury, don't you worry, it will only be about an hour. And there I was, 2 hours in, 2 coffees in, eating all of their ginger snap cookies. I feel bloated now. I've had so many of the bloody things. I'll tell you what, though, I did take a seat in a nice new M3. Oh, God, it was nice. 107 grand, though. Just, I don't see the point. You roll it off the forecourt and you're 40 grand down. It seems such a bad investment. Yeah, I did see that. I did see that green one. This one was... It was similar to the old Aspirina blue ones, if the real strong, bold blue colour. But God, it was nice. Lovely cars. But again, from if you're smart with your money, you stay far, far away. Worst investment known to mankind. Especially driving them in Britain as well, because every second corner you take, you're hitting a 7-inch pothole. Yeah. And that's it. Another grand down for a wheel. Oh dear. But there we go. I've made it out of there. Car's absolutely fine. And we're all good. So, this afternoon, ladies and gents, we are obviously focusing on the CPI, the headline CPI event. We've got the core CPI and base CPI numbers. Although the core CPI is... Oh, that's monthly, isn't it, actually? Yeah, so the core CPI monthly print is showing a 0.3% forecast. That's a 0.1% uptick from the prior CPI figure. We've got CPI at the CPI forecast for normal CPI, not core, so base CPI is 1%. That's the forecast. That's a 1% forecast up from a 0.3% prior figure. I mean, that is a whopping jump. And the annual CPI rate is looking at 3.4%, which is up from 2.4% last month. So, I mean, these are some seriously big numbers, actually. These are some seriously big numbers. If that comes out correct, if we look at a 1% increase in CPI for the month of March, and then a 1% increase in base CPI annually from March, we're going to see some big moves today. We really are. A lot of that will be priced in. You can always anticipate about 65% of the market to be priced in on that, maybe a little bit less, 55 to 65% of the market being priced in. But that other 45% or whatever it may be, around abouts of the market is not going to be priced in. That's a lot of liquidity that's going to be shifting. Plus, if you've got that priced in and the figure comes out obviously different than the analyst expectations, you have almost 90% of liquidity in the markets there just shifting in the space of a minute. So I think there's a lot of margin for error here as well, because with these analyst expectations, having some pretty bold claims here. They're pretty bold moves. And it does make sense, of course. We're thinking about oil shock at the moment. We're thinking about the fact that the Hormuz Strait has been closed down for so long now. Oil, fuel prices at all-time highs. That's feeding into the inflation machine. It does make sense completely, thinking about it from that perspective. But I'm telling you guys, if we get... we could even see a 0.3% increase. That'd still be a big number, but still be a huge drop from the analysts' expectations. That's going to cause a jump in itself. I can't believe it will be, but if the inflationary numbers, if the CPI numbers actually come in at a beat on these figures, then that's going to be really ultra, big shock to the system. We're going to be looking at 300 pip moves in the Dow Jones. We're going to be looking at 120 pip moves in the S&P, 200 pip move in the NAS 100. We're going to see some absolutely mega moves this afternoon. We really will. The only situation I see here where we won't see much of a move in the markets is if the analysts' expectations are spot on. And that's if 65% of liquidity in the market's priced in. We have, we're still going to see a bump. We'll still see a bump, but it's just not going to be anywhere near as significant, than if we get a beat or a miss on those numbers. But nevertheless, guys, big day this afternoon for the CPI. Big day indeed. Of course, we have to think about what this is going to do to monetary policy and the Fed as well. Good afternoon to you, Braden. Good to see you, buddy. So yeah, we have to take that into consideration as well, of course. So, we've got the Fed at the moment, which have been working tirelessly over the course of the last couple of years to get back down to that 2% inflationary target. Well, DT, the Tangerine Man, he's just come in and wiped all that work out. Yeah, so we're going to have to take that into consideration as well. Are we going to see the Fed raise rates again? If these CPI numbers are as significant as 1% increases, what does that look like another month down the line? We also have the geopolitical backdrop. We've only got, 5 days until the ceasefire ends? If the ceasefire ends and they don't reach an agreement, which, according to Trump at the moment, which honestly we have to take it with like the biggest boulder of salt you can humanly lift. If there is a deal reached, then of course this all goes out the window. But if the ceasefire ends and nothing is agreed, it's back to the Hormuz Strait being closed down again for business or ships being blown. And if that's the case, we're going to see the continuation of oil shock inflation surge throughout the markets, surge throughout the economies, and the Fed won't have any other choice than to raise rates. We will see an increase in rates, an increase in the Fed, an increase in the from the ECB, and an increase, of course, from the BOE amongst the G8 currencies that will be most significantly affected by Eastern oil. So there's a hell of a lot going on here. There's a lot of moving parts, and there's a lot going on. So there's a lot riding on these numbers, but also because of the amount of spinning plates that there are, it may or may not dampen the situation as well because there's so many other moving parts to consider. Just noticing we've got a good full house today. So good afternoon to you, Ryan. Good to see you, mate. We've got Scotty D, Cora Tim. We've got Tony Tone, Sarah, H&C. Good afternoon to everybody. Hope you're all doing well there. So yeah, that's kind of where my head's at with the CPI today. So what we're going to do now, we've covered the numbers, we've covered the fundamentals, the geopolitical backdrop. Let's get stuck into what we're looking at with trading opportunities. We've got a decent amount of time. We're not going to be going through the FX space too much, even though saying that, I am going to have an FX trade in the basket today because I'm not looking at it from an intraday perspective, but I am going to throw in an intraday news trade in the FX space, arguably in the Euro USD, I believe. So we will have a look at that in a moment. So the DXY is currently trading in 98.74. We've had a big jump down, broke through the ascending level. If we look at this on the 15-minute time frame, I was saying about this that if we get a breakdown below that ascending level, it's going to be good news for shorts. I mean, you couldn't have made this up, guys. We literally drew this in together. It's not been moved at all. And we literally ended there and opened up on Wednesday morning after the weekly rollover, quarter to 12, down at 98.92, a whopping gap down on the rollover. And we have ranged since then. We haven't really seen too much of a deterioration in the dollar since that point in time. But it's just such a gap down from that ascending level. Based on thinking about today's data at least, the CPI backdrop, good CPI numbers. Again, a lot of it priced in, some of it not. Probably looking at the DXY trading back upwards of around 99.20. We may see liquidity at 99.28. Before it dies a bit of a death there and then starts to come back down and sort of continue trading within the margins here. If it's a big miss on the numbers, then the DXY trading through the floor at 98.50, I would anticipate a move back down into lower liquidity at around 98, to be honest. And that's on the basis that we get a decent miss in the numbers. So a decent miss, analyst expectations are 1% up on monthly and annual CPI this time around. So a big miss on the numbers would be only seeing a 0.5% rise in inflation, or maybe even a little bit less, 0.4, 0.3%. uptick in inflation. So we may see that dollar just spike down intermittently back into 98, 98.10, and then we'll start to see the continuation back upwards again as it recovers into the weekend. So let's go down, have a look at the euro dollar super quick. Euro USD 15-minute time frame up against the highs. We've got the 1, 2, 3 going on here at the moment. The 1, 2 are certainly the best ones. The third is definitely flagging behind. We've got relatively good. Margin between the 1, 2, 3 and lower liquidity down here. This is the ceiling of the move, by the way, in that Euro USD. We had that trade running for bloody ages. But yeah, we've got the break close and the retest going on here. So I'd be happy using that as a target profit now with the latest. And a good break of structure for this one's probably... Can you see these highs? Look at that. That's a really nice intraday ceiling in there. Okay, so what we would do here is just drag a bar across those highs, scrunch the chart, pull across, and then we can see that all the way along here we've got these little inflection points, don't we? And this is where the market's coming back and really reacting positively to this area. So my then thoughts are, if we get a break of structure below that area, targeting, so yeah, entry about there, targeting down here, the floor. Stop loss for this one. I mean, we're looking really aggressive. We want to be in and out of this trade in no time at all. We could be looking at anything from like a 1 to 4.2, which is ridiculously good. We love those kind of risk reward ratios. But with the kind of CPI that we're anticipating this afternoon, we have to consider the possibility of slippage. I would say 100% of the trades that we take today are going to be affected by it to some degree. It really is down to each individual's broker or platform they're trading on in terms of how quickly you're going to get your trades in and executed. Obviously, something like the Euro USD will be a pending order. The only ones that are going to be market orders, well, we haven't covered everything yet, so I'll have to make that decision as and when. But I think for the most part, we'll be focusing on pending orders. So it really is about how quickly your broker is going to get us to market and what the fills are like as well, because the spread variations are going to be going wild today, team, wild. But we'll do what we can. So I always try to mitigate, like having a good understanding of how market mechanics work is very good, because you can offset some of that as a technical risk with a risk reward. So yes, we're looking at a 1 to 4.7, but it's because we're anticipating getting a fill at a 1 to 2.2. So you will probably lose that much of a trade. I'm not kidding. So we could have a real aggressive entry, 1 to 4.2, but walk away with a 1 to 2.2 or a 1 to 2.5 or something. If you're really lucky, you may get better than that, and that's great, but I would anticipate the worst case situation. So Euro USD first up on the chopping block. Right, let's move on up to our precious metals. We've got gold, silver. Gold's really not making any decent headway today. Let's talk about some numbers. So if we get a miss on the CPI today, we're probably going to be looking at gold trading upwards of 48, 48.10, back up into big liquidity up here. We don't have a decent path of least resistance, and this is what really sells it short at this moment in time. It would be lovely to have a really nice clean POLR so that we could look at taking the structural break at 47.78, riding the rally right the way back up to 48.20 plus. But we just don't have that. That's the unfortunate thing. We've got huge areas of inflection in here. As we've seen from this area in price action, we had the big buyback. We've had this absolutely insane move up to here before getting this super, really, sizable short right down to liquidity down at the lows there. We can't ignore that. We can look past it to a certain point, but we cannot completely ignore it. Now, with CPI numbers being thrown around the markets and everything else, some of the technical levels, you can kind of look past it a little bit, but you don't want to completely ignore them. And unfortunately, with where gold's trading, we just don't have that path of least resistance available to us. If the numbers are on track or a beat, however, things do significantly change. Because of where gold's trading right now, it would make sense to lock in shorts back down to approximately 47.10. the structural point which it's trading at currently could be used as the liquidity area for the short, and this actual breaker structure could be placed in here as like this secondary level. We would have a TRF situated at 47.30, but I wouldn't be too concerned about this at this point in time, not against the power of the CPI this afternoon. So my bias then is for, or my trade setup for this afternoon is locking in a short at 47.50, targeting down there at the lows at 47.06, and the stop loss for this one is going to be, I would say, around the 50% point between A and B, which is going to yield a 1 to 4. Again, bad fills, spread variation, slow broker execution speeds at high volatility times. You know, obviously they're going to be prioritizing their A book traders. B books are always going to get the bottom end of the barrel. That's just the nature of it, unfortunately. But you're probably going to be looking at a 1 to 2.5 again, maybe a 1 to 2.8 on something like gold. It's going to be thick with liquidity in there, so you probably won't be as affected. Same with the Euro USD, to be honest. It's got lots and lots of money trading in it, so your fill shouldn't be that bad. But that's the kind of thing I'd be anticipating, and then we'll look to take the run back down to 47.06. So that's that one. And energy markets. So generally unaffected by CPI. Sometimes I've seen natural gas have a bit of a knee-jerk reaction, same as Brent. But to be honest with you guys, relatively stable reactions from them. US crude probably leading the charge. Now, we've actually got a short currently live in UK Brent, which is unfortunate. We're currently trading at 97.75. We have got 10 minutes to go now until the CPI release. I'm really hoping that we reach target profit on this one before the event. And there's nothing that we can do at this moment in time. I don't want to get rid of the trade, but it has broken the structure again. This is what we were waiting for. This is what I mentioned this morning. Wait for the structural break, and then we should be good. Path of least resistance all the way back down to TP. So we're just going to have to sit tight with this one and hope that it reaches target profit. It may come a time in the next sort of 8 minutes or in the final 3 minutes before CPI where I decide to lock in and remove the trade. We cut it out early, or alternatively, you know, we've got our stops at the moment up there at 102.052. I may bring the stop loss down to something ridiculously tight, like 98, for example, just to make sure that I'm going to get out with a few greens, you know, before the CPI releases. Just on the off chance that for whatever reason we do get some kind of crazy knee-jerk reaction and it starts spiraling back up at 101 due to a risk factor or something that we haven't considered. Best to keep the profit in your back pocket. That's what I would say about that. And then finally, US indices. So this is where we're going to see the majority of our action this afternoon without a shadow of a doubt. In terms of target profit areas, we have a lot of available margin here for potential. We want to be in and out of this as quickly as humanly possible. We all know that we've got bullish path of least resistance on this US 30 Dow Jones at the moment, so we want to be utilizing that. The market currently trading at 48.20, the previous high at 48.35. That's going to be a stone's throw for the CPI event this afternoon if what I believe is going to happen happens. I would say that this area in here is more likely a decent area for a TP. That's only a tiny little fraction above the previous high, but that is where there's the sort of next intraday floor. So then the breaker structure on this one, which again, team, it kind of has already happened. We can go and put in a zone just above the current price. And then the target profit, obviously, at the base of the zone above. So then TP there. And the stop loss all the way up there for around about a 1 to 3.6. So it's a very, very little trade. Very little trade indeed. Then NAS 100. Again, we're looking at the same thing, but for shorts. So this is kind of the trading plan that I was talking about this morning. For those of you who are UTC traders, you're there for the morning stream. This is the kind of setup that I was looking for this morning, but obviously for the US Open, not necessarily the CPI event. But we're just going to roll that out anyway. So the breaker structure for the short could be there. I'm really liking this NAS 100 short. It does allow the market to breathe and flex under the weight of the CPI this afternoon without triggering a trade, which is the good thing. So target profit down at 24,808, entry at 24,986, and the stop loss for this one tucked in nicely behind liquidity there at 25,035. That's going to yield us around a 3.6, probably net return at a 2, I would say. Worst case scenario, again, we may see better than that. Great if we do, but let's just plan ahead for the sort of the worst case scenario. And that's the NAS 100. I don't know at this rate if there's actually... No. I'm not even going to bother looking at the S&P. We'll focus on the US 30 Dow and the NAS 100. Right, so just to recap, we've got exposure coming up in the Dow, the NAS 100. We've got a live and running UK Brent trade, which isn't really going our way. We need that to get a little bit weaker in the next few minutes. Otherwise, we're going to take one or two options of locking it out early or bringing down the stop loss. I'll stay on that one in a moment. We've got potential for a gold short in there, and of course we've got the Euro USD locked in there as well. The only downside about any of these is we don't have split bias opportunities in the Euro USD and gold. We are short and only short. The good thing about this is one, actually no, it's not. No, it's not a good thing. No, we're a little bit lopsided. Yeah, we're a little bit lopsided, but I suppose it offsets the risk with the stocks because we've got the long in the Dow Jones, I suppose. Yeah, that's going to have to be that. Right, guys, I'm sending you the trades. We're about 6 minutes away from the bell ringing. I'm going to fire these out now. NAS 100, gold, Euro, USD, and the Dow Jones. I didn't get the Dow, did I? Download, there we go. And the Dow. I'm going to punch some numbers in now, guys, and then try to make it over to oil. So please just bear with me while I get the numbers loaded up. Okay, there we go. Right, let's... Right, got a few minutes to go here. Oh, I was really hoping that damn thing would come down. Really hoping. Oh. What are we currently trading at? 1 to 2. 1 to 2.4. Let the rest run. Alright, tell you what we're going to do, team. For those of you who have still got the Brent short opened up, we're going to remove the target profit altogether, okay? So just remove the TP or sling your target profit down at 94 down there. We're going to bring the stop loss down, and we're going to bring that stop down to a 1 to 1 or a 1 to 1.4. So yeah, we'll keep the... So we'll bring that down to 94, and we're going to bring that stop loss down to 99.2. That's going to lock in a 1 to 1.4 on that front, and we'll just let the rest run. We've got some profit in the tank there. I don't care about losing the rest of it. But we'll see if it gets any kind of knee-jerk reaction. I may end up taking profit in big liquidity down there if there's a knee-jerk reaction or something. I can't imagine why it wouldn't trade back up, to be honest. So I am anticipating a stop out at a 1 to 1.4, but we'll see. Okay. Right. I just need to change the numbers on that sec. Drag that down. Drag that down there. Okay. All right. So we're done. We're locked in on oil. Everything else is ready to rock and roll. And we've got 1 minute 50 seconds left to go. Let's see what this afternoon brings us, team. Let's see. Yeah, let's see what this afternoon brings us. Let's have a quick look at UJ. No, I don't want to be in that anyway. That's fine. I'll keep a close eye on that. Dow Jones. You won't be able to see it on the real-time stream, but I'm also streaming the economic calendar as well at the same time for the recording. So I'll be able to see the numbers when they come through in real time. I would suggest you all do that as well, because the unfortunate reality is I shout the numbers out, but honestly they've already been released. I don't know exactly how long the delay is between me saying something and it coming through to the other side. Discord is pretty good with that, but there's still going to be at least a second. All right, we've got 40 seconds to go, ladies and gents. Let's get it. Let's get ready. Natural gas had a good move today. All right, we've got 15 seconds to go. All right, 5 seconds. 4, 3, 2, 1. And let's go. Okay, so it's actually a miss across the board, but still significant. Still significant. We've got a 0.9% CPI print for the month-over-month of March, which is a very significant uptick in CPI for the month of March. We've got a very significant 0.9% uptick in annual CPI rate as well, which is a big jump up in inflation on the most important CPI metric that the Fed watch. And it's a 0.2 for the core CPI month over month of March, which is probably the least important, which is the same as the prior figure. So even though it's a miss on the numbers, it's only slight. And this does confirm that we've got a significant uptick in inflation as a direct result from the conflicts in the Middle East and the US, which is then bleeding out to the US economy. So our bias should be quite correct for the most part. DXY is tumbling. Not being that extreme, to be honest, at the moment. The spike in the stocks is pretty lackluster at the moment. UK Brent knee-jerk reaction is non-existent as expected. Gold should be it's not really doing anything either. What about the Euro USD? Is anything doing anything? Okay, we've got not much of anything going on. I think this is like the this is basically what I was explaining before the data release, right? Even though there is a slight change, the worst case scenario from a trading perspective this afternoon was to get a print on the numbers that was the same as the analyst's expectations, right? That's the worst case for us, because that means that there is the least likelihood of any kind of surprise event or any major volatility strikes or anything like that. We still get a bump. We still get the small bump, but there's nothing of major significance will happen, and that is unfortunately what we're looking at now. Yeah, nothing's happening. Damn it. Right, everybody, can you please remove your pending orders in the Euro USD and gold? That's the first point of call. So please remove your orders from gold. Pending order gone from that one, and the pending order gone from the Euro USD. I'm just going to shove them out now. 1 and 2, they're removed. Okay, so yeah, get rid of them. The UK Brent trade at this moment in time is completely and utterly unaffected by everything that's happened. So please, can you resume normal trading parameters with that one? Reinstate the stop loss at 102.052 and bring the target profit back up to where it was originally at around 96, 97. and just leave that there as a normal trade. And we're basically unwinding the stuff that we just did. The US 30 Dow Jones is already live. We don't have anything live in the NAS 100, so can you please remove the pending order on that one as well? Although, what I would say is that's going to be the short trade for the NAS 100 this afternoon in the US Open anyway. So when the US markets open up in an hour's time, that is the trade idea that we'll be going for the short. So you can leave it up there for that purpose if you so wish. If you want to be taking a long in the NAS 100, it is a full-blown 15-minute breakout, close, retest. Not just one of the not one of the miniature ones. You need to wait for a nice extended move above, nice big extended push back into 25,175, and upwards you go. And by that point in time, you'll be trading at 8 o'clock on a Friday afternoon. So I wouldn't even be considering the NAS 100 for longs at this trading week anymore. That's going to fall into next week's pocket. And then, of course, we've got this Dow Jones trade, the only runner, which hasn't moved anywhere, really. We've had the one blip, haven't we? And that's about it. That's about it, team. And this is the same trade that we'll be looking at for this afternoon's US Open. If we're still stuck in it, which we undoubtedly will be if it doesn't hit stop loss before then there's nothing else we need to do. We just let it go. If it comes into a stop out, then we prepare to essentially take the same trade again. If the markets go short, we're going to be trading the NAS 100 anyway. So the Dow Jones won't even have a role to play this afternoon if the markets dip before they rally. Okay? That is it. That is the wrap. So big numbers from the CPI event. We can't say they're not. We cannot say they're not. They are some big numbers from the CPI event. They will have a significant impact on the most recent and up and coming monetary policy. They really will. They will shape the monetary policy narrative now for the next month or up to 6 weeks, especially if we start to see a trend. The Fed would have been considering this and had the foresight to anticipate it to a certain extent. They would have priced some of this in because they understand how things like the conflicts will shape the economic strength or weakness in their economy. So we can give them credit for that one. But we should be anticipating rate hikes now. We really should. The impact to the market this afternoon, it's basically been a non-impact event as a result, which is not very exciting for us as traders, especially when this was the highlight of the week this week. But again, team, we have to remember that the markets are just exhausted 90% of the time at the moment. The only thing they are ever increasingly responsive to are where is Donald Trump, what's he doing, and what's he saying. These are the three main cause of price volatility in 2026. Donald Trump and his daily whereabouts and what he's saying. And it's a sad state of affairs. We had the same thing around the first time in his first presidential term. And it's the same again, isn't it? It is just the same again. So we just have to push through, persevere. We're still looking at some consistent gains. We've still seen drips and drabs of it falling through week to week. It's not all glorious as it has been in previous years. Oh, it's worse this time around by a long shot, buddy. Yeah, by a long shot. You are absolutely right. And we said this, didn't we? We said this before he was coming into power. We said it was going to be worse the second time around. The thing is, it's funny, isn't it? We all know it's going to happen, and we all know just how bad it's going to. Well, we don't know how bad it's going to be, but we have a good idea of how bad it's going to be. But it never makes it feel better when you're in the middle of it, does it? You know, it really doesn't. But we're going to continue doing what we're doing, and we've got some good plans in place. We've got double the streams now on Wednesday, Thursday, Fridays. We're going to be really digging into the European session and turning that around on a day-to-day basis. So, yeah, it's all going to be all right. It's all going to be good. But listen, guys, I'm going to wrap things up there then for the week. I've got some admin to do this afternoon, so I'll be finishing off that. I'll release the end-of-week trading performance report as well into the general chat, so you guys get stuck into that one. Have a fantastic weekend if I don't catch you again before this evening. Take care of yourselves out there, and I look forward to catching you all on Monday morning. So I'll see you then. Thanks, team. Take care. Catch you later. Bye-bye.